Hey everybody, welcome back to the channel. So if you're new here, this is me trying to build a TFSA dividend focus portfolio. I'm trying to build a $500 account to a $10,000 account. So if you want to follow along with the journey, just hit the like, comment, and subscribe. And you can follow along with the journey so you don't miss any updates on any stocks I buy, any stocks I sell, or just any news in general that I'd like to discuss. So it's been a choppy week for sure. Last week was a huge sell-off. Like today, we were doing pretty well. The market's rebounding, but down 3% over the week. We're up $21, or pretty flat over the last month. Past 3 months, we're only up 1% because of all the losses that we've got in the last couple months, or just the last week. And we're up about 9%, or 698.49 so far in the TFSA. So just to review what's going on in the account, Apple's doing very, very well. Even yesterday, when every stock in the market was down, Apple was up, along with Tesla, interestingly. But that's probably just due to the fact that there's a lot of fears about, inflation running rampant, as well as, the new variant of, the disease that won't be spoken of. And Apple just isn't a company that's going to be affected by this at all. Like, they're pretty resilient, and they're going to just continue making money no matter what's going on in the world. And they have great pricing power, so they can raise the prices of their products. They're going to be fine. So their profit margins are going to stay high, and they also have a 30% return on invested capital. So any dollar they invest into their business, they get back 30 cents extra of profit. So that's really good that they can get a high rate of return reinvesting back into their business. And that's why I'm invested into Apple individually, just because for that reason. We purchased 2 more shares of Alimentation couche-tard just because it dipped a little bit more. And this is a company I wanted to rebuild. I had 5 shares previously, so just wanted to get back up to 5 shares again. For Scotiabank, they actually announced an 11% dividend raise, which is great. So you're now getting, instead of $3.60 per year, you're getting $4 a year for each share you have. And so I decided to buy a bit more of this fractionally. Dividend 15, we decided to get 5 more shares of this just to get a bit more income into the portfolio. So each share of this, you're going to get 10 cents a month. So we're going to get 50 cents a month of passive income from investing here. And we also purchased 3 more shares of Smart Centers REIT, just because it went close to $30, which is where I like to buy it at. And we went from 12 shares all the way up to 15. So great monthly income payer. And even if we're entering another lockdown, it doesn't matter because Walmart is their biggest tenant, right? And all these plazas are resilient. So as long as Walmart is okay and can stay open, they're going to be collecting their rents just fine. And they are also the retail REIT that didn't cut their dividend at all, unlike RioCan, which is weirdly heavy into the malls. So that's a reason why I like Smart Centers, because I think their portfolio is more defensive and more reliable in good times or bad. Even better in bad, arguably, because Walmart does even better in a recession, and especially with inflation coming up, people are going to be flocking to Walmart for sure. I picked up another share of Suncor just because oil dipped a lot, because people are thinking that because of the new Transformer variant, the Omicron or Omicron, whatever you call it, people aren't going to be traveling. So oil tanked a lot. Now, it doesn't really matter too much just because Suncor is still making a lot of profit, even with oil at the $70 range. That's what they did in the third quarter. So I think they'll be fine, and it seems to be an overreaction because it seems like a very mild variant at this point, just because it seems like the symptoms are mild if you're fully vaccinated. So shouldn't be too scary. I'm not worried about oil in the next 1 or 2 years. I think the demand is going to be there, and as a result, the supply, when there's no supply and really high demand, prices tend to stay up. So I think Suncor has a lot of room to grow in the next 1 to 2 years. And I bought 1 share of TD Bank. They actually announced their earnings tomorrow, but they should raise their dividends as well, because Scotiabank raised their dividends by 11%, RBC raised their dividends by 11%, And TD Bank usually raises their dividend a lot more because they have the highest dividend growth rate of any Canadian bank. So that's why I like them a lot. And they have a low payout ratio. They're a very conservative bank in terms of their investments. They don't take a lot of risks. So even when the economy is doing very, very poorly and other banks don't do quite as well, TD Bank is, going to be that reliable income source for you. It's a bank that's not going to do anything foolish. They're always thinking ahead, and they're very risk averse as a bank in general. So it's a great investment for a long-term buy and hold, a forever stock, as you call it. And pretty major update for the income. So right now, annually, we're earning over $500 per year in dividend income, which is great. That's a great milestone. It just shows that, this concept really works. I mean, if you go back to March, we were making, $18 a month. We can even look monthly average. We've doubled that since then to $41.75 per month. So it just goes to show that if you continue investing into good quality businesses that pay a dividend every month, every 3 months, and they raise those dividends just like the banks have done recently, 11% for Scotiabank. Power Corporation did this earlier for 10%. TELUS raised their dividend as well, and now TD is raising their dividend. So without purchasing any additional shares, you're earning additional income, which is fantastic. So you don't do anything. All I'm doing is just buying great companies, holding their stock, and I'm just getting a portion of the profits, because that's what happens when you have part ownership of a great business. You get part of the profits, and you can do with those profits what you please. We're reinvesting them. You can also take them out and spend them if you'd like, but I'm still trying to accumulate more money to get more dividends, to make these more meaningful, and they're definitely growing over time. And you can notice that we're up to a 24-cent per hour raise, for my wage, assuming a 40-hour work week, all without doing anything, just leaving the portfolio as it is, and this number is going to grow on its own just due to the dividend increases over time. And it takes us about 2.4 months to earn $100. So this number is continuing to shrink over time. This is how I'm tracking the compounding effect of dividend reinvestment. So this was over 6 months before, then to 3.5. Now it's down to 2.4. We're going to see this number shrink and shrink. I'm going to see how quickly we can earn $100, and how that changes over time, just to show the concept working. Especially if people are afraid and the market's going to head in a downturn, that every YouTube thumbnail is talking about, market crash or whatever. And I buy all these stocks on Wealthsimple Trade, so there's no commissions on Canadian listed stocks and ETFs. And right now, you can feel free to join my link in the description below and get the value of 4 free stocks. So this could be a great way to start your own journey and maybe get lucky and get a really, really good stock.